Welcome to our comprehensive profile of a true powerhouse in the global pharmaceutical industry, Divi's Laboratories Ltd. For investors looking for stability and market leadership, Divi's, trading under the ticker DIVISALB, is a name that commands respect. Established over 30 years ago, this Indian multinational has risen to become one of the top 3 API manufacturers in the world. Unlike traditional pharma companies that focus on finished dosages, Divi specializes in the ingredients that make medicines work. Today, we will explore why this company is often referred to as the API King and how its massive manufacturing scale provides a competitive moat that few can cross. Divi's Laboratories operates through 3 primary business segments, ensuring a diversified revenue stream. The first is generic APIs, where they dominate the global market for molecules like naproxen and dextromethorphan. In fact, they hold a 60–70% global market share for some of these products. The second pillar is custom synthesis, where they partner with big pharma companies to develop patented molecules. This segment accounts for nearly 40% of their revenue. Finally, their nutraceuticals division produces high-quality carotenoids for the food and dietary supplement industries. This balance between high-volume generics and high-margin custom projects is the secret to their financial resilience. Scale is everything in the API business, and Divi's infrastructure is nothing short of massive. The company operates 2 major manufacturing units near Hyderabad and Visakhapatnam, spanning hundreds of acres. These facilities are frequently inspected and approved by the US FDA, ensuring they meet the highest global quality standards. With over 14,000 employees and a continuous investment in technology, Divi's has built a fortress of production capacity. Their ability to manufacture at a low cost while maintaining high quality allows them to outcompete manufacturers from China and Europe, making them a preferred partner for global drug makers. From a financial perspective, Divi's Laboratories is a cash cow. The company has historically maintained some of the highest EBITDA margins in the industry, often hovering between 30% and 40%. Even in challenging years, they manage to remain debt-free, a rarity for a capital-intensive manufacturing business. Their annual revenue has seen consistent growth, reaching approximately 8,000 crores in recent cycles. For investors, the return on equity, ROE, and return on capital employed, ROCE, are key metrics, and Divi's consistently delivers double-digit performance. This financial health allows them to fund multi-billion rupee expansions entirely through internal cash flows. Divi's is truly an export-oriented powerhouse. Over 90% of the company's total revenue comes from exports, primarily to highly regulated markets like the United States and Europe. This global footprint protects the company from domestic pricing pressures in India. They serve the top 20 pharmaceutical companies in the world, acting as a critical link in the global medicine supply chain. By focusing on quality and compliance, Divi's has become an indispensable partner. Their reach extends to over 95 countries, making them a significant player in the international trade of life-saving medicines. Like any stock, Divislab has faced its share of headwinds. Following the COVID-19 pandemic, where the company saw a massive surge due to molnupiravir production, there was a natural correction in earnings as pandemic-related demand subsided. Rising raw material costs and pricing pressures in the US generic market also impacted margins temporarily. The stock price reflected these challenges, consolidating after hitting all-time highs. However, seasoned investors view these corrections as opportunities to evaluate the company's long-term fundamentals. Divi's response has been to pivot toward new growth areas, ensuring they don't rely solely on their legacy products. The future looks bright for Divi's as they tap into the next big wave in pharma, GLP-1 drugs for diabetes and obesity. As patents for these multi-billion-dollar drugs expire, Divi's is positioning itself to be a primary API supplier. Furthermore, the company is investing heavily in a third massive manufacturing site, Unit 3, in Kakinada. This new facility is expected to drive the next decade of growth. They are also expanding their presence in contrast media, the dyes used in MRIs and CT scans, a high-barrier market with very few competitors globally. These strategic moves suggest that Divi's is ready for its next leg of growth.
In summary, Divi's Laboratories remains a gold standard in the Indian pharma space. With its unmatched scale, debt-free balance sheet, and dominant market share in essential APIs, it offers a unique combination of safety and growth. While short-term market fluctuations occur, the company's long-term trajectory is supported by its expansion into high-growth areas like GLP-1s and contrast media. For investors looking to capitalize on the China Plus One strategy, where global firms seek alternatives to Chinese suppliers, Divi's is perfectly positioned. Thank you for joining us for this stock profile. Remember to consult your financial advisor before making any investment decisions.